Gold is at another all-time high, 36.50 as we speak, up 1.5% on Monday morning as we record this. Silver is tracking behind, about up about 1%, 41.40. The precious metals are rallying. S&P 500 is in an all-time high, and we need to take a closer look at the charts. I've invited Chris Vermeulen back of the Technical Traders to run us through his chart analysis. What is happening in the markets? How much room is left? And Chris and I talked briefly off camera. We're also going to take a look at some of the mining stocks, meaning the Silver Miners Index, GDX, GDXJ, just to see what the performance there is and if there's anything left to be gained, of course. Before I switch over to my guest, hit that like and subscribe button. It helps us out tremendously, reach a wider audience, and we much appreciate it. Now, Chris, it is great to welcome you back on the show. Thanks so much for joining us.
Thanks for having me, Kai. Always a pleasure.
Yeah, how was your summer? Let's start maybe with a bit of small talk, Chris, before we dive into the technicals. But how was your summer? How busy was it? Looking at some of the charts, couldn't have been too busy.
This summer was great all around. The equities markets moved up and to the right. Gold traded sideways, building a launch pad, which it has now broken out of and launched from. Had a great time with the kids and the family. It was good weather. I mean, it really was pretty much a golden summer across the board. So when we look at most assets, everything, even the dollar index is actually looking like it's trying to put in a bottom. And we'll probably tie into that. But I pretty much everything right now is pointing to higher pricing, going north on the charts. And it's kind of exciting. A lot of people are waiting for the Fed to drop the hammer to see what's going to happen and then see how the algos and the big funds will react to it. But everything is looking pretty good at this point.
Yeah, it's like you just touched on it. I was going to ask you as well, Chris, but maybe the macro picture, just real quick. What is influencing markets right now from your perspective the most? Of course, we'll look at the technicals here in a second, but you just touched on the Fed. What should we be paying attention to from that macro side?
Yeah, I mean, I'm not good with macro because it never makes much sense to me. You never know how the same piece of data, like now, won't have the same reaction later down the road in a different mindset of investor, a different market environment. So it's really difficult. But right now, I mean, I read something earlier, people saying the Fed looks like they're going to cut half a basis point. Somebody's saying, half a percentage point because jobless claims or unemployment's going up. And you look at the numbers. I mean, we don't have a jobless problem. It's so minor. I don't really see a whole lot happening, to be honest. If anything, they might drop, a quarter basis point, but I still don't see or feel the pain for the Fed to have to step up and start shooting off these bullets to try and save the markets. And the way I see it is usually the markets falls apart and then the Fed starts, dropping quarter basis points to try and save it through there. And I just don't see any pain yet for them to do that. So I don't really see anything changing. I think people are going to maybe be upset if there is no change because so many people are asking for a rate cut. But yeah, it's going to be interesting. People are waiting for it, and there'll probably be some disappointment. There always will be, whatever it comes out as. But I wouldn't trade based on what you think is going to happen. I would just stick with the charts because they really are showing the direction and which direction you should be focused on.
Yeah, well, the market seems to be telling us that bad news is good news based on the reaction, as you were saying, $6,500 or 6,500 points in the S&P 500 already, and to moving higher. A lot of euphoria in the charts. Chris, what is the market pricing in? Maybe we'll start with the S&P 500, and I'll bring it up as well. But what is the market pricing in here?
Yeah, I mean, right now the market is in limbo. I think the market is trying to figure out what the Fed is going to do. I think most people are too tied up in the news. They're too tied up on economic data and the Fed. And so that's why the market, I think, is choppy here. It's inconsistent where we have there's a natural upward bias, but then we see big institutions, we see some heavy selling days where it looks like people are unloading portfolios, large chunks. It's really people in limbo. The market is still pointing to higher pricing. Like when we look at the daily chart on the right-hand side here, we're kind of having this rising kind of wedge, and it's kind of like a running correction. So instead of a bull flag that runs up and then flags in a controlled way and then has that second half of that move, a running correction or a wedge like this is a very volatile type of pattern, meaning when it comes to an end, it's going to be very sharp. And the big question right now is it going to have a sharp crack and fall and decline, or is it going to have a big pop and rally? And so that's kind of the phase we're in. And we need to expect there's going to be some big movements. Now, the market is pointing still to higher pricing. The trends are up on pretty much across the board. Even when we look at the short-term basis, this 30-minute chart on the left-hand side, these lime green areas is when the S&P 500 has dropped into oversold territories. They've also dropped to this pink moving average, which is the same as this 20-day moving average on the daily chart. So these two lows. And whenever the market's getting overbought based on these indicators, these tools, we see the market step back in and get bought right back up. So these waves of panic, these waves of fear quickly get bought up by some big institutions. So right now we're just kind of in limbo, but I would expect the market to break and rally to the upside, to break out to the upside going forward. But you're right. The market, when we look at the price of gold itself is warning us that the world is more or less preparing. It's telling us something bad is happening. And we're just waiting for that piece of news or that event, that kind of shoe to drop to cause be the name for the next financial reset, which I think is coming sooner than later. But you definitely don't want to fight this trend. And gold is telling us something bad is brewing. But you can't bet and try and pick a top, because this market climbs a wall of worry, and it can keep doing that for a lot longer than most people can stay solvent.
Yeah, no, absolutely. Never fight the Fed, or you should not fight the Fed, is probably one of the themes that we need to be paying attention to here. One thing I've noticed, and I'm not sure if the charts sort of correlate as well, but the second jumbo cuts were on the table. Fed Governor Chris Waller brought those up. The market, gold in particular, the S&P 500 seemed to take another leap forward or jump forward. And looking at your chart here, it seems like there's a green candle sort of mid-August, which is the time around it happened, I think. Is a longer green candle? Yeah, exactly, right there is a longer green candle upwards. I'm curious if you see that correlation as well, where the macro and the charts sort of collide.
Yeah, well, yeah, definitely. I think people were getting real nervous leading into the news, and then we hear it and we get that pop in the relief. When people are nervous, they usually sell stuff, or when they're uncertain. And then once the news hits the table and they're like, oh, okay, now I know the answer. People don't feel fearful anymore, and they get back in. So there's no doubt economic news and things like that sway the markets, but it's usually short-term dips and blips. It's usually not a trend reversal type of move. And when you look at this, the market is, it's looking primed and ready to push higher. And I'm pretty excited. I mean, we're long the markets here, and everything is still pointing to higher prices.
Yeah, August 22nd was with the Jerome Powell speech in Jackson Hole as well. I think that's where the green candle actually is. Yeah, exactly. Right then, that's when you open the door wide to Fed cuts. In terms of volume, just looking at the volume chart down below as well, it doesn't seem like there's a massive breakout in volume. There are little blips on the radar screen. Anything that we should be looking at in terms of volume there, Chris?
I mean, we've got 3 high bars of green bars here, meaning there's some pretty good buying going on. I think the volume doesn't say a whole lot, although it is bullish. The higher volume green bars say those are days of accumulation. So people are building positions, and I get right now it's just wait and see. Just have to let the market mature. There's no need to pick a direction. I mean, you should be long, if anything, here, and just let it unfold, which it should resolve to the upside.
Talking about like volatility and maybe limbo, the VIX, it's pretty much dead, the VIX patient. If you were to use it as a heartbeat monitor, trading or the VIX at 15, it's unbelievably flat right now. So it also points to what you've been saying, that we are in limbo. We're waiting for something to happen.
Yeah. And it's funny, if you look at the VIX, I mean, it usually has this, you have a spike of fear, and then once that euphoric, that panic, dissipates, it just bleeds out. But if you just look at this chart pattern, and then I flip over to, say, the S&P 500. So this is the exact same time frame, and then I just flip the scale of the S&P 500. We just invert it. It's pretty much the same. I mean, right now there's not a lot of fear in the market. Believe it or not, the VIX is low. People aren't seeing volatility. And when the VIX is low, the market can just keep going higher and higher and higher. And that's really just kind of what we're letting unfold. A lot of people are trying to pick a top. A lot of people are betting on falling pricing. And this type of price action has got them thinking it's getting close, which it could be. But you definitely don't want to get in front of this because there really isn't a whole lot of fear yet. And this market is trending up.
Yeah, I sometimes look at the CNN Fear and Greed Index, and while you were talking here, I was looking at it. It's perfectly in the middle. It's 52. It's neutral. The charts describe exactly what you're saying. And the sentiment indicators, I think the Fear and Greed Index is like 7 indicators combined, I believe, and
Right.
all
Yeah.
neutral.
I like to look at also the put call ratio. It's a really weird, funky looking chart if people don't look at it, but more or less it's telling us there isn't a ton of fear. We're kind of in neutral territory, nothing too significant, but there's these extremes on this chart that tell us when the market is, when there's a big green spike up here, people are buying put options, they're betting on falling pricing. And that's usually that you're near a market low, an oversold market condition, and we see it rally. And right now, I mean, the put call ratio is not giving any insight either. So the market is low volatility. It is trending up. And it's the same with the Nasdaq. When you look at the Nasdaq 100, it's been trading more sideways than upwards, with the big Meg sevens, kind of some of them taking a bit of a backseat and holding it down. But overall, it's still a bullish pattern and pointing to higher pricing.
Just looking for impulse here. The DXY, the dollar index. I'm curious what you're seeing from there, because it seems to be stabilizing as well. From what I've been seeing, I'm curious what your thoughts are on the DXY.
Yeah, the dollar index is trying to figure out if it's putting in a bottom here. It looks like a bottoming type of pattern, but it has not bottomed yet. More or less, it's kind of, I think a lot of people are thinking, there's going to be a rate cut, which could make the dollar lose some value. So that's kind of what we're starting to see. Is that I think that is the belief, is there's going to be a rate cut. Usually the dollar is going to want to pull back. And if there's a rate cut, we're also probably going to see like bonds move higher. And if we take a look at bonds like TLT, you can see the last 4 days, bonds are just shooting higher. Everyone seems to be moving in, believing there's going to be a rate cut. And there could be. The question is it zero? Is it a quarter? Or is it half? We're just going to find out. But people are front running the news and trying to get positioned in for it. Of course, the news is going to hit. We'll probably see it pull back. But the dollar, people are betting on a rate cut, higher bond pricing, and they're expecting the dollar to fall, which will be interesting to see. Because, if we go back and we look at this chart, there's a comparison chart. The left one here, I'm going to go back to 2007 to the stock market high. We just go back here and I'll just zoom way in. So if we go back, the candlestick chart here, Kai, is the S&P 500 weekly chart. The S&P 500 was hitting new all-time highs just before it put in a major top and started to crash. Now, the yellow line is gold. And you can see we're in a very similar type of situation. We had a big pullback this year. We had a rally. We're pushing to new highs with stocks. 2007, we had a sharp pullback, and then we've had a rally. We're pushing to new highs. Well, gold for both of these timeframes are like the top performers long term. They are picking up the slack. Gold is performing very well. And what's really interesting, if we go back to this time window, on 2007, on the left chart there, we look at the DXY, the dollar. It had sold off. It was one of the most hated currencies. Everybody says it's going to be worthless, blah, 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 all of that stuff. And then we come over here to where we are now on this other chart. If I get this to load here, and we take a look at the dollar index. Dollar index is back down at the bottom. It's one of the most hated currencies. Everybody says it's going to zero. So we have a very similar setup. Erase all the news, the Fed, the economic environment, and just focus on price action. We have a very similar setup. Stocks are frothy. They're being dragged up by the Magnificent Seven, so it's not a healthy rally. Gold's outperforming everything else. The dollar's the most hated. And, the markets really do move for the same reasons, no matter if it's a tech bubble, if it's a financial crisis like 2007 or whatever this new one's going to be here now. They sell off because people are scared and something bad is happening, or they rally because they're bullish and confident. So we have a very similar setup where we've seen before. We're seeing gold, silver, and miners come to life and outperform. This is what happens just before a major trend reversal. In fact, if we look at just the cycles in the market, usually precious metals do exceptionally well right near the top. We saw this in 2007 as well. And so this is an early warning sign. Industrial capital goods have been doing very well also. And it's interesting because when you come down and look at this business economic cycle, which I don't think I've shared with you on here before, but more or less we're in this this yellow cycle here, Kai, is the economic cycle, the business cycle. The blue one in the background is the stock market cycle. And again, the stock market cycle is saying precious metals are telling us something bad is happening. The stock market is likely to start to top out soon. This yellow cycle is the economic cycle. And if you look where we are right here, innovation and adaptation, we've got in the same time frame, this is AI. This is adaptation. Everybody's bringing in AI into all the businesses. It's spurring on tons of growth. It's dragging the stock indices up by the Magnificent Seven. And so we're just in this final phase. The economy is still growing and still has some strength, but the stock market already knows the end is coming. The music's about to stop. And it's having a game plan, being able to identify when has that music stopped, when do you need to change, pull chips off the table, or change your strategy or hedge your positions. So there's all this kind of interesting stuff coming into play, like the dollar and like 2007 and these cycles. I find it all really interesting. These are big cycles. These have to do with the whole kind of global economy. So they don't happen overnight. They take months, quarters, in some cases, years to actually top or bottom. But we're in the process. I believe we're on the homeward stretch to potentially, if we fast forward from 2007 and we just look at the price action, this is where gold shot up another 30%. The stock market fell 55%. And as the stock market tumbled, the US dollar took off. And so I believe we could see something similar potentially down the road. Stock market sells off. Gold has its final blow off move to 4,100, 4,500 an ounce. Silver, I think, is going to hit 50 an ounce. The dollar is going to put in a bottom and start to rally as the stock market crashes. There's a lot of stuff coming to play. I probably just lost everybody, but there's a lot of really interesting things coming to play, which kind of just you need to be aware of.
No, absolutely. Lots going on, of course, and even Kiwis debated stagflation, recession, all of those topics being discussed already. But you're bringing up the gold chart here, Chris. Let's take a look. You just mentioned 4,100 or 4,500. I'm assuming that's a 30% on top of what we're seeing already. So I'm curious. I know, like, we're in unprecedented territory here, chart-wise, probably. But what are the charts telling you here, Chris?
Yeah, well, there's a pretty clear chart pattern just using Fibonacci extension based on this low that we saw back in November 2024. We have the big rally up, we have the high, and then we have this pullback that we saw earlier this year in May. Using Fibonacci extension, we can get a gauge of where that momentum should carry the price of gold, which brings us to about 4,100, 4,800 or $80, somewhere in that range. And so gold is broken out of this big bull flag. It's starting to pick up speed, high momentum. So there's a lot of upside potential for gold here. And, just looking at the short-term chart, there's some really nice momentum here. If we were to look at this from a swing trader perspective, this rally up, this quick little hiccup back down to the 5-day moving average shows that potentially in 3 or 4 or 5 days in the next week, we could see gold run another about almost 5%, just based on this high momentum move, which would be very nice. And it would actually balance out the size of this big bull flag that has been forming all year. So we got this giant bull flag, which is you have a rally up, it creates a flagpole, and then you have the flag flagging sideways in the wind, which is a pause before it continues higher. So overall, when this breakout that we're having, the first kind of real resistance area, I think, could be right up here around that 3850 area. And that could happen literally, as you and I are speaking, like this week type of thing or next week.
Yeah, we're getting enough macro data to sort of fuel the fire here, or fuel the rocket, right? To use that kind of lingo. But there's enough out there that makes that feasible. Like, I'm fully on board, even from a macro perspective there, Chris. Let's take a quick look at silver as well, because it is lagging behind. I'm worrying, or not worrying, but wondering if maybe recession fears or the industrial demand is holding it back, and why isn't it moving as, let's say, violently as gold is?
Yeah, I mean, it has a similar chart pattern on the daily chart. It's showing a pretty explosive move in the near term. Just looking at this most recent pattern, it's showing silver should run potentially in the next week or so to about $45 an ounce. If we go and we look back at the monthly chart and look at the big picture of silver, silver has this tendency, which is what you just touched on, Kai, which is it can kind of be dormant. It can kind of lag for a little bit. Gold might take the lead, and maybe miners sometimes take the lead. And then suddenly silver will just like take off and play catch up at the last hour. I think that's likely what's going to happen here. I think silver all of a sudden is going to pop and take off. And I think we could actually see it hit $49, $50, maybe hit an all-time high in the next month or so before maybe we see a little bit of a pause and correction and the stock market has a reset. So gold and silver and the miners are all looking very strong. Not only are the charts on multiple time frames pointing to higher pricing, but as you mentioned, kind of the fundamentals, the economics, are also in favor. We have a really good tailwind, which is why I like gold here and why we've taken an added position in it. And really, if we take a look at this added layer of gold seasonality, Kai, you can see August, September through almost the middle of October, gold has a natural tailwind. It naturally wants to go higher on average every year. So a lot of things are lining up, telling us that gold should just whiz its way higher. It should be pretty effortless. And that's the joys of riding a trend. A trend should feel somewhat effortless. If you're trading and everything's going against you, it means you're fighting probably an underlying trend in the opposite direction. Right now, all the trends, including fundamental data, is favoring gold.
Let's take a look at the miners, Chris, because that's where the leverage is. That's where the fun is. Gold price exploding, which leads to higher margins in the miners. GDX, SILJ, you got up here as well.
Yeah,
absolutely rallying in recent days. What do the charts tell us here?
Yeah, I mean, on a short-term basis, when we look at the 30-minute chart, we can see, silver miners got into an oversold condition, and they have just screamed higher. We're long SILJ here with our short-term sector strategy. When you look at the monthly chart, silver miners are up here trading near close to all-time highs for this ETF, going back as far as it did. When we look at the GDX, which are the large cap gold stocks, it's very similar. It's trading right up near all-time highs, or actually at all-time highs pretty much, telling us that I think we've seen a good chunk, a majority of the move for miners temporarily. I do think they're going to go a little bit higher. But what's interesting is the juniors haven't really, like the gold juniors haven't really taken off. They've had a very nice run, but they're nowhere near the all-time highs. And I do feel like the juniors are eventually going to have a really good window. I do think they are going to have a bit of a pause and pull back along with everything else over the next, 6, 8, 12 months. If the stock market does stall out, I think we're going to see everything have a bit of a pause. And for gold, silver, and miners, it's going to create, a bull flag pattern, more or less. Wherever this tops out, we'll eventually see miners put in a bull flag, a launch pad before it takes that next big run and shoots higher. And I think GDXJ and like the junior and microcap gold stocks, when we get to that market environment, are going to be a really awesome play. But right now, money has been going into silver miners, into the large gold miners, and not quite as much into the juniors. But they're all pointing to higher pricing, and I think there's quite a bit of upside long term down the road. And I think near term they're going to have an explosive move. Gold, silver miners should pop. But I do think after that pop in the next month, they're going to probably start to go sideways and build a big bull flag pattern for down the road for it to have another leg higher.
Yeah, one thing many investors are not aware of is that Newmont is the second best performing stock in the S&P 500 year to date, which is absolutely brilliant. A lot of people are just not aware. Over 110% this year already, year to date. I think it's only being bested by a hard drive company. I think Seagate is in the top spot right now. Palantir's dropped. They used to be in the lead. Since you bring up the chart there, Newmont, it's the only S&P 500 traded gold miner. How much love is left there in the chart?
Yeah, well, the one thing that makes me nervous when it comes to the miners, like when you look at those large caps, every time it's got up to this nosebleed level, it's going for a swan dive. When you look at GDX, it's a lot of large caps in there. It's at a level where it got sold into. Silver miners are the same. So I have a little bit of hesitancy. I like gold because it's a fresh breakout. It's got a clean move. It just had a huge multi-month pause. So it could keep moving higher, and miners might actually start to struggle because they've just had a hell of a good move. And we saw this in 2007. We saw out of gold, silver, and miners, the number one performer in this market environment was gold. It rallied and outperformed silver and gold miners because the stock market might start to struggle. And if the stock market struggles, we see anything in it. Gold stocks are a stock. They're stuck in the stock market. And if the stock market tide is going down, it's going to naturally pull miners or mute their upward move. So I'm nervous. Newmont, everyone knows it. If somebody doesn't trade gold or know much about gold and all that stuff, they probably still have Newmont, or they know about it, or they own it, because it's just that crowded play. So I think the play right now is miners have been a great move. We'll milk it for as long as we can and see how far they go. But no, I think the end, a pause is coming soon, and there will be a point to realize it's going to need a breather before they go higher, which isn't a bad thing. But gold to me is the fresh play with the most opportunity.
Fantastic. Chris, really, really appreciate your insights. It's always great to have you on. It's always good to get some different perspectives, chart perspectives, because we often talk emotions here and just assumptions. The charts always tell a different story, and I really appreciate you coming on. Bit of a rhetorical question nowadays, because people should by now know where to find you, but where can we send everybody?
Yeah, if people want to learn about what I do, I share my trades and my analysis with my own portfolio at thetechnicaltraders.com. And also on my YouTube channel, The Technical Traders, I share daily market analysis, and you can follow along with more granular charts of what's happening yesterday, today, and what to expect and how to play charts and things like that. Yeah.
Fantastic. Awesome. Really appreciate your time, Chris. Always good to see you. Always great to catch up. And everybody else, thank you so much for tuning in here to Soar Financially. Bit of a chart check. You heard it. Gold has lots of room to grow. Maybe even this week, we'll see where it goes. But the economic data is pointing only in one direction. That is upward. But be careful there. Maybe hedge your bets a little bit. Be cautious, of course, and have fun. It's going to be great. We're in a bull market, as Rick Rule said. The miners are still catching up, and especially the juniors still have a lot to run, in my opinion, when I look at the charts, but also just in terms of generalist acceptance. So thank you so much for tuning in, and we'll be back with lots more here from Soar Financially.